Welcome to TheoTrade. This is Don Kaufman. You are here for December 20th, 2015 Theo Video Report. First, we shall start with what we saw in volatility last week. You want volatility? Well, you got volatility. Let's actually take a look over at the SPX because, it is the granddaddy of all the products over here. We talk a little bit about volatility. We went everywhere last week to arrive at absolutely nowhere. This is actually price's percentage chart, but here's the 5 trading days. It's not often that I step back from markets and actually look back at a previous week and go, just wow, like what happened last week. But here's the 5 trading days where, again, showing price's percentage because I like to point out that the year is coming to a close and the S&Ps are actually down 2.56%. It's been a while since the S&P is down. And if you hear a little bit of enthusiasm in my voice, it's because I've been talking about volatility for the past, umpteen months out there. All the hallmark signs of volatility have been here throughout the entire 2015 year, and all the signs are there, and still people, they don't listen about volatility. So great, the FOMC raised interest rates. Who cares? The order flow, though, is not liking it right now, and that's what we're going to be taking a look at. So again, just to look back at this last week, and now just show just straight price over here. The S&P has roughly started the week right in the neighborhood of about 2,000, and the end of the week in the neighborhood of 2,000. So we kind of got everywhere to get absolutely nowhere. What's important now, though, it's not what just happened over the past couple of weeks. And again, this is fairly extreme. We went 2,100 to 2,000, back to 2080, back to 2000. It's Mr. Toad's wild ride out there. What is important, though, is what we're looking at moving forward. So here we now are moving into the holiday week. Christmas is upon us. Lots of traders taking vacations and so forth. Again, I'm recording this on the Sunday coming into the week of Christmas, but you can expect that, still this Monday, Tuesday, even Wednesday, we could see a little bit of market movement. These next 2 weeks are kind of like an unspoken trader's holiday, but all bets are kind of off. All right. We saw some fairly extreme moves, obviously, in the last 2 to 3 weeks. And this surprised me, and it may surprise you. But if you look at the DEES4 weeklies, which they only have 4 days remaining to expiration because, Christmas is coming. And what does Christmas happen to fall on? It happens to fall this coming Friday. So we're going to lose a day. Even though we're losing a day on the week, and this is, again, what kind of surprised me on it. With 4 days, we're still looking at an expected move of $40. You kind of step back from that. Yeah, whatever, Don. It's a $40 expected move when you really only have kind of like 3.5 trading days this week. It's actually a fairly extreme number. And the reason I bring up a fairly extreme number is I'm going to go over to think back for just a moment. And again, I'm just going to make you realize why this is kind of an extreme, reading here. Let's go back precisely a week. So here we are on December 20th, obviously Christmas coming up on the 25th. Let's go back exactly a week. So I just took us back to, again, December 13th. And the reason I did that is I wanted to display to you, this is with the Fed announcement. We were seeing a $63 expected move. So, hey, we don't have that much risk in the market. But that's with a full 5 days. Here, though, we're at a 22% volatility. Again, with the Fed announcement, we had a 27% volatility. Without the Fed announcement and the week, of Christmas here, we're still at a 22 vol. Still kind of serious over there. Now, what you want to look for this week, I read quite a bit over this weekend, and everybody kept pointing out like energy this and energy that. So I had to pull up the XLE, which is the energy sector. And the XLE, it kind of got its clock clean this past week and ended on Friday down 2.6%. So everything I kind of read, though, was talking about how like energy was the area that got hit. Energy is what kind of got hit the hardest over there. And no matter where I looked, I kept seeing about energy. The reality, though, the XLE only got hit by 2.6%. The real laggard, okay, happened to be in the XLF. It's in the financials. This is what we want to watch very carefully in the days to come. The XLF, it's the second largest of the sectors inside of the S&P, and it just seems that like this like kind of fell off the radar screen, that everybody was focused, on energy and it's oil and it's the dollar. Yeah, meanwhile the financials are down over 3% in one trading day. And again, it kind of felt like that fell by the wayside over there. That needs to be your focus point. And the reason the financials really need to be the focus point, the financials got hit hard, and it didn't have to do with the bonds. The bonds barely moved, okay, coming in there. So is there something much larger going on inside of the financials that we're not seeing just yet? So then I dug even deeper. I looked into some of the options volume in the financials. There's nothing extreme. And again, this is from Friday's close. There's nothing extreme that I can read. The IV percentile, it's 32nd percentile. That's kind of boring. There's not a huge amount going on over here. The number of calls traded versus the number of puts, it's actually all normal. Even during the expiration week, it's all normal. It's all under control. Nevertheless, the financials are down over 3% in one trading session. Okay. Now, in addition to watching the financials, so why do we want to watch the financials? Because quite literally, okay, that is what led the entire S&P down on Friday. Just plain and simple. Call it whatever you want to call it. Everything was down, Don. No. Okay, some of the sectors were doing just fine. It even looked like at a point we could rally. What I'm looking at right now on Thinkorswim is Market Watch, under Visualize, Index Watch, and I went to specific sectors. These are the 10 sectors that comprise the S&P 500. The ones that really, really matter, though, are going to be IT, okay, and of course the financials. So you can see IT was weak. Now, IT, what does that amount to? It amounts to Google, Amazon, okay, Apple. Apple now is actually not doing too well in the year over there. We'll show that maybe a little later here. And of course, Facebook, which are all down for the most part, anywhere from 1% to 2% on Friday. But, again, we're still watching those same behemoth technology stocks, but now it's really financials that have caught my eye because, coming into the eye of the storm, financials are always involved, meaning that if we're going to start really seeing an impact of volatility, you will always see those financials involved. And what was very peculiar about the financials is, again, they were down over 3% without large movement inside of the bonds. So stay tuned. Again, we want to see this week, which should be a rather docile week, right? It's Christmas week over here. Want to see this week. Is there going to be some follow through to the downside with the financials over here? And follow through, you start getting below 23. I mean, listen, we haven't been down there in quite some time. You got to get back, all right, all the way to like August. And again, the financials, even into the October timeframe were extremely weak. Under 23, though, again, that's kind of the demarcation line we're going to look for in the financials. You can see some broader weakness around the markets over here, but this is a fairly dramatic candle that you just haven't seen in a very, very long time inside of the second largest sector in the S&Ps. With that, I bid you guys farewell till tomorrow. Again, stay tuned. Some more volatility to come, possibly this Christmas week.